Hi everybody, thanks for joining. It's Rolando with TI Communities from the Grove Apartments. Hey, hope everybody's enjoying their Sunday afternoon. So today, thanks for joining us. Hope you're enjoying these videos. I want to talk about insurances, different types of insurances for we have financial literacy, and so it, you know, what type? There's a lot of insurances. I think there's about 7, 8 major ones or more common, but they're also kind of like little known insurances or more minor insurances. So I just kind of want to briefly talk about different insurances. I'm not an expert on insurance, but policies and all that. I'm not an agent that sells insurance, but just a little bit of what I know and what have I looked up and what have I researched, and it's kind of one of those areas that you could look into it a lot. You could talk to an agent that sells insurance, you know. But so just in case if you just kind of like never really paid attention, never thought about insurances, thought you couldn't afford it, you don't see the point of insurance. Just maybe just to talk a little bit about it, so maybe you can get a new perspective on it, or maybe you could be like, hey, you know what, that doesn't sound too bad, or you know what, I never thought of that. So just a little discussion, just to learn a little bit. So one of the insurances. Well, first, what's the point of insurance, right? We know we got to pay for it. Like, why I don't want to pay out of my pocket for insurance? Well, the whole purpose of insurance is it's basically saying that you're paying. I mean, you're paying to cover an unforeseen or some type of event that's going to impact you, right, financially. And so, like in other words, flood. If you can't afford to, and who can to just totally pay to fix their house after a flood, you need insurance beforehand, right? You can't have the flood and then call the insurance company and say, hey man, I'll pay you the $100 a month, you fix my house. Okay, so in other words, a car, your car insurance, you gotta have your car insurance total, full coverage, and then you total your car. If you can afford just to fix your car, like you had $20,000 sitting around, 30, then that's no big deal to you, right? But most people don't have that money saved up to fix their car. They gotta have insurance, so we pay a little bit per month to cover unforeseen or an event that's going to impact us, right? Health insurance, stuff like that, homeowners insurance. So there's a trade-off, right? And so you just never know. You're like, well, some people say, well, why do I want to pay for insurance? I don't. More likely this is going to happen to me, but you just never know, right? That's just the whole thing of insurance. But some insurances we have to have by law. Some insurances are just more worthwhile than other insurances, right? So the first one, like possibly everybody pays, right? Well, especially here in the state of Texas, should be paying. It's car insurance, right? We're mandated to have car insurance. I don't know about other states. It depends, right? Different laws, different states. But here in Texas, you're mandated to have liability insurance, right? Because there's two types of, the main ones is liability and full coverage, right? And it might be different in different states. But the liability is mandated by law, which just means that you're paying for insurance to cover for anything that you're liable for with your car, right? So you hit somebody, it's your fault, your insurance covers their damages. And so, that's mandated by law. That's pretty good. We have to have it. Different insurance companies have different set policies, right? I think there's like 30,000 coverage, 60,000 coverage. Usually you kind of just shop around for your liability insurance. You go where you want to go. Bigger companies, I think, have bigger policies. You go to smaller ones, they have like a 30,000 limit. That just means that if you hit someone, and the most it'll pay them is 30,000 for their damages, right? For their injuries. If you have 60,000, then it'll pay for 60,000. And why you say, well, why am I going to pay more, for this damages for the person I hit? It's just, I think the bigger the policy is just that, just in case if they try to sue you, if your insurance company only pays 30,000 and something really bad happened, they could sue you for the rest of the money for the damages or the medical bills. And so if you have a bigger policy, you won't get sued. It'll just come out of insurance. So, it gets a little complicated, and, just kind of make it simple. But so for the most part, you got to have liability in the state of Texas. So everybody should have liability on their car. It's just that just in case you could be driving down the road and run into someone's fence, right? You destroy their fence, your car's messed up. now your liability insurance pays for the offense, or covers most of the costs. It's your fault. So that's basic, right? But if you want to get full coverage is usually when you get a new car, right? You get a brand new car, you want to have full coverage, because if you don't have full coverage and you wreck your vehicle, because you're supposed to have full coverage, right? But maybe you have a shady insurance company that allows you to change the liability. You're like, hey, I can't afford full coverage. I'm going to change the liability. And then you go and get into a wreck, and your car's totaled, and your car was worth $25,000, or what? That's what it's your bank loan for the car is. Now you got to pony up $25,000, right? You're like, why am I going to pay on a car that's totaled, and I still have 5 more years to pay on it, right? I don't want to pay on it, so that's a big loss, right? And so that's why full coverage is better, because full coverage covers the cost of the vehicle. So now with full coverage, you just totaled that brand new car, that $25,000 is going to get covered. And so, or it should, it depends, right? The insurance is going to cover what the car's worth. So if you actually owe 25,000, but the car's worth 20, then you'll still have a loss, but better than paying the entire thing, right? So full coverage is pretty good for brand new cars, newer cars. The older the car gets, the less it's worth, right? And so then you might not need full coverage on an older car. If it gets too old, if you've had the car for 20 years, you can't get full coverage on it. You can only get liability, right? They'll just say this is excluded from full coverage. There's really no point if it's a car that's worth $3,000 at this point. I mean, it's a good running car, but it's just a 25-year-old car. It's not going to have full coverage, right? I mean, so unless it's like like a muscle car from the 60s that you built up, it's real expensive, sports car, classic, whatever. So in other words, if you have a regular car, there's no really need to get full coverage, right? But full coverage is good for a new car, a newer car, a car that you can't afford to get totaled. It's just it. If you have an old car, it's worth $3,000, it gets totaled, it's $3,000, right? But if you have a car worth $30,000, $40,000, $50,000 and you total it, that's a big loss. So that's what full coverage. So full coverage is good, but it's more pricier, right? So anyways, and so there comes a point when your car is getting a little bit older, and you're like, should I still keep full coverage on it? That's something you have to decide. That's something you have to balance on. So it's just one of those things. So yeah, car insurance. There's also another insurance, another like a minor one. It's called the underinsured insurance. And why this is important is that if you're driving and say someone hits you, it's their fault, right? And they hit your car and they don't have insurance, right? You're like, oh man, I have these damages, I have these injuries. This guy has no insurance. So it can be something that happens, right? There's people who don't have insurance. And so then if you have underinsured insurance, so you have your regular policy, right? Say you have full coverage, and then you also have an underinsured insurance. I think it's like $15 extra a month, 20. It adds up, right? But it protects you from getting hit by someone with no insurance. And so what happens? They hit you. They have no insurance. That underinsurance will actually kick in and help you with that, right? So say someone hits you and they do have insurance, but their policy limit is $30,000, and say you have more than $30,000 worth of damages, you have more than $30,000 of medical bills, you're under insurance. So say you have $50,000 of damages and medical bills, right, resulting from this crash, and this guy only has $30,000 coverage to pay you from his policy. The underinsurance will actually pay some of that extra past 30. So kind of a good thing to have if you can afford it. Like as always, the risks, the pros and cons. Do I want to pay a little bit extra just in case if someone hits me with underinsured and with no insurance? It just it's one of those things, right? But just to know that we're aware of that it's offered. If you live in a city that has a lot of people with no insurance, major city, right? Probably a good idea. It just depends on you, right? And it's always a risk, right? It's a risk. You just never know if someone's going to hit you. So like I said, if you have a brand new car and you don't want to pay for full coverage and you get it down to liability and then someone totals it, you total it, and it's your fault. It's just one of those gambles, right? But that's car insurance. Most people know about car insurance. Underinsured, I don't think a lot of people know that. Also, another big one is health insurance, right? Health insurance is one where I think everybody pretty much now at their employer offers health insurance. so the health plans, one of those things where health insurance is the same thing, is that you're paying a premium, a monthly coverage. You're paying to the insurance company, right, money, a premium, so they can keep covering you, right? And so what are you covering for? You're covering because if something happens where you get sick, right? If you have to go to the hospital, if you get the flu, if you need treatment, something happens, even routine checkups, your health insurance covers it. So there's different plans. It pretty much goes by deductible. I know there's like low deductible, high deductible. It just means that if you have like a low deductible plan, that means that you're gonna pay more per month, right, to get coverage. And then if you have low deductible, and then you have the high deductible means you pay less per month, but it takes more money to get that coverage you need. Like in other words, you have like you got to pay a couple months, so until the deductible's met. And so it's just one of those things where you got to look into it for yourself. It gets a little complicated. It's not really that complicated, but it's just one of those things, is how much you can afford per month and how much you need to pay for that deductible for the insurance to kick in. I'll give you an example. Is that like, if you have like a high deductible health insurance plan, it just means that like maybe your premium per month is pretty small or smaller. Say you pay $120 a month, but then your deductible is like $7,000-8,000, which means that your employer is contributing to your deductible, you're contributing to your deductible. So then maybe for January till March, April, May, you go to the doctor and they're like, oh well, you got to pay more out of pocket because your deductible hasn't been met yet, so the insurance really isn't kicking in. And then once you do meet that deductible, then you don't have to pay a lot of out of pockets, right? But so something to look into. It just that's basically what it is that the higher you pay per month, usually the deductible's lower and the insurance kicks in quicker. If it's a lower premium, what you pay per month, you usually have to pay a higher deductible, which means it's one of those things we gotta look into. It depends on what you can afford. It depends whether, so if you're single, then you just pay for insurance yourself. It's not that big of a deal, right? But if you have a family or you have children, well, family means that you're married, or spouse, husband, whatever, is on the plan, and your kids, right? And that's usually a lot more pricier, right? Now you're talking about $400 or $500 a month, whereas a single person, maybe it's like $200 a month. And so that's kind of like a balance, because you're like, well, man, I have kids, I have a spouse. It's a lot of money per month. So where the cost savings come in that is that if you were married and you had your own insurance and then your wife, husband had their insurance, it might cost more than just one person getting a family coverage. So in other words, instead of two of y'all paying for separate plans, one of y'all might have where it's cheaper actually to just put y'all both on the same plan at one employer. And also with the kids, the coverage extends to the age of 26, I want to say. And so that means if you have 4 or 5 kids, they can be on the health insurance to 26. So now if your kid's 21 and they're working, they don't have to pay for insurance, they just stay on yours. And so, that's pretty good. And it's cheaper probably for them to be on your policy than for them to be paying out of pocket for their own policy. And so you could even say like, oh, it depends, like if it's real expensive, it's like $500 a month, and you're like, man, I can't afford to have my 22-year-old, 24-year-old on this policy. They could always chip in, right? They could pay a little bit of what they would for their policy. They could pay you, so you could divide the cost among, if you have a lot of kids and they're all old and they're working, they're paying for their own insurance, right? They're not paying as much as they would at their employer for their single policy. They're all under your policy. And then when they're older than 26, they get their own policy. But just something to think about. What's the cheapest for everybody? What's the better insurance and all that, right? So it just depends, and so it's just something to look at. The family, because if you just get the insurance with children, that means you don't have a spouse or husband, wife on your policy, just you and your children. So just something to think about. Not everybody has different employers, so the different insurance policies and rates are different. So it's just something to pay attention to, how you can save money for your family, right? How to get everybody covered and what's the cheapest or what's affordable to you, right? So that's health insurance, okay? Another one is dental insurance. Dental insurance optional usually, right? Your employers usually offer it. You can buy dental insurance from I think like third parties, right? But dental insurance just basically means that you're paying that to pay for any medical work you need, dental work you need that you can't afford all at one time, right? You need root canal, you need like crowns put in. It's a lot of pony up, right? But if you have dental insurance, it'll pay, right, the majority of it. And there's different plans, same thing, the low, I want to say low deductible, high deductible, or premium and low, whatever. So there's different plans paying different amounts, like 50% of all dental work, and there's another plan for like 80%. Just depends what your employer offers. And that just basically means that, you know, you're going to not pay for routine cleaning of your teeth. You can do two per year. So they clean your teeth, you know, they check them, the x-rays. And that's good, right? And so, but when something happens, oh, you have a cavity, oh, you have root canal, you have something, wisdom tooth extraction, that's when you need the insurance usually to pay for that. So it'll cover it. Dental insurance is not cheap. You know, I think it's like 30, 40, 50 bucks a month. By itself, that's not that bad. But you add that to the health insurance, it adds up, right? But usually dental insurance good if you have kids, right? Kids need to go to the dentist, especially you want to get braces or something like that. So dental insurance is pretty good. But something offered, right? There's also discount plans for dental insurance. That's usually like where it's not insurance per se, but it gives you a discount. You might have to pay per month for a discount. Better than not having one, right? So, you know, I know there's some dental dentists out there where they'll have, their office will have like payment plans. You'll go and you're like, okay, it's going to be $800 worth of work. You know, we need so much down front. We need you to pay so much per month. That's usually pretty good. Still, it probably still costs more than just getting an insurance plan yourself, dental insurance plan, right? What else is there? There's also, let me see what I put. Okay, so car, health, dental, disability insurances. Sometimes your employer offers these. Disability, I think Aflac, I don't know, don't quote me on that, but I think Aflac is like a disability insurance. These insurances are, it's offering you a chance, say, so in other words, you go to work and you get hurt and you're disabled. And so you gotta think there's short-term disability and there's long-term disability, right? Long-term, God forbid, you get into an accident, you know, and now you're paralyzed beneath you, whatever, right? And you're paralyzed long-term. You're out of work long-term. Short-term, you're at work or you're going to work, whatever, you're vacationing and you break your leg, right? And now you can't go to work because you have a broken leg, you can't do your job. That's short-term disability, right? So usually these disability insurances, I think they're more for long-term, but they also can pay for short-term. Just depends on the policy. And it basically means that they're going to cover you to recover, right? They're going to pay you a portion of your monthly wages to you while you're recuperating, right? And so these are, I think that, my employer offers one, and it's a little costly because it goes off your income, and there's different things to choose, right? You can choose that if I get hurt, the insurance will kick in 7 days later, right? That costs more. Or you can put it, the insurance will kick in 6 months later. And so I think the payments are for the rest of your life, right? Depending on the policy. And so, you know, you think, oh, yeah, 7 days later, if I get hurt, man, I want a paycheck the next week. But it costs. You got to pay for it, right? And then there's, it depends on what they consider disability. So you need to pay attention to that. You need to see what they cover, you know, because some will cover sickness, some won't cover like diseases or something. Some cover only accidents. Some cover only when you lose a limb or your life, or so. Well, not life, but so the disability insurance is costly, but it's designed to keep you getting money if you're no longer able to work. And so those are something to look into if you can afford it. I had the disability insurance this last year, but probably won't carry it next year. I don't know. I don't think so. But we'll see, you know. Another one that's pretty big is life insurance, right? Life insurance usually broken up into two different ones, term and whole life. So life insurance is just saying that if something happens to you, that the cost of your burial, the cost of your debt is covered. Okay, and so this thing is, they say it's very important if you have dependents. If you have dependents, they say you should have life insurance, right? That way, these people are going to take care of your estate that that you leave behind. And so I don't know how much the burial costs. I think it's up to 10,000. So nobody has 10,000 laying around. Just hey, just in case if someone has a funeral, right? So I know sometimes families pull together money to pay for a loved one's funeral. They have the you've seen them where they're having these fundraisers or selling barbecue plates, right? It's they need money to bury their loved one, and so that's what the insurance is for, life insurance, right? You don't want to be on the side of the street trying to sell plates to fundraise to cover someone's burial costs, right? So life insurance is very good to have. It's cheaper when you get it younger, and the two of them, term and whole life, right? So they're two separate kind of ones. Term is cheaper, right, than whole life, and term just means basically, it's good for you to look into it for yourself. But so basically, it just means that you're getting covered for 20 to 30 years from now, right? If I get term life insurance right now, it's really only good. Well, it is for 20, 30 years, which means that I have a dependent, and if something happened to me, they needed my income for the next 20, 30 years, right? That income, they were counting on it, and so I'm not here anymore. Your spouse, your loved one, they needed your income. So you're covering that, right? There's different limits. You can get, like the lower limit, 50,000, 25,000 is pretty affordable. 10,000, 15, just to cover maybe, your burial. Then, and the more you go up to 100,000, 500,000, now it starts getting costly, right? And so that's more like, hey, there's some, like you said, if I pay for $15,000 worth of coverage term life, maybe I'm only paying $8 a month, and that's just saying like, hey, something happens to me, it'll pay for the funeral, it'll pay a little bit, and that's it. But if you want to pay higher, you're like, hey, you know what? I want to pay for all my debt, all my funeral, and for my spouse, whatever, husband, wife, to get a lot of money, so they can, pay off the house, they can pay off the car, they can, so there's some things you want them to use for it. And so that's term life. The whole life is good for your whole entire life, right? It's a little bit more money. And the younger you get it, the more cheaper it is. The whole life is pretty good because it's not for 20, 30 years, it's for your entire life. They say that if you don't have dependents, it's not really a good investment. But it's just one of those things what you want to do. You have a beneficiary, whoever you choose gets that money, right? And so you just keep paying on that whole life, right? You can't get insurance if you have a terminal disease. You have stuff that that impacts it just your coverage. So that's one thing. The older you get, the more expensive life insurance is. They generally say you don't need life insurance on your children. They have no dependents. They don't have no income. So they're like, maybe to cover. I mean, God forbid that something happens, right? It's your child, and you want to pay for a funeral. So if you did have it, you don't need like $500,000 on your child, or I don't know if they offer that much, but that just doesn't make any sense, right? So, so I know employers sometimes offer insurance, term life usually, and it's not that much. It's like $3 a paycheck or something, and it gives you like 50,000 coverage or something. So something to look into about the life insurance. I think it's probably pretty good idea to get a coverage to pay at least for your funeral. And so that way your family doesn't have to come up with money. No one's in the hole because of an unexpected, someone passes away. And it's not that much. It's not that much to cover a funeral. You're looking at like $10 a month or something, very cheap. And so definitely look into that. That's probably a good investment. You just never know what's going to happen. And it's cheaper when you get it the younger you are. And you don't need $1 million life policy unless you're making. But I mean, if that's what you want, but that's probably not something that's affordable. But it depends on your income, right? So that's life insurance. I didn't even know this, but more people I think today have pets. They have pet insurance, and same thing. There was two types of coverage. One was like for routine checkups and all that. Everything's getting. When I was a kid, I don't know, maybe it was just me. We had pets. We didn't take them to the veterinary. But some people, that's their babies, right? They take them to the vet, and I know it's costly. I mean, the veterinarian's a doctor, right? And so they're paying for these treatments and all that out of pocket. So it might be cheaper to get I think it even went by age. I didn't look too much into it, but I think it said the age, the breed. So it's probably a good investment if you have a dog and you really really love this dog and you're gonna take him to the vet and you're gonna get him all this stuff to look into the pet insurance. I don't know who carries it, but I know they have it. And I think the other one was more for like surgeries and all that. Like the other one was more routine. The other one was more like life-threatening surgeries or things they have to do for dogs or cats or whatever pet you have, right? So pet insurance, it's one of those things. You love your pets. You have a lot of pets, or you have you breed animals or something. You need pet insurance. Something to look into, right? Homeowner or rental insurance, right? So homeowner rental insurance, if you rent, it's a good idea to have rental insurance. I know at the apartments, the TI communities we stay at, they require rentals insurance. Rental insurance is basically, if you're a renter, right, at an apartment, it just means that you're covered for like a fire, flooding. I think it's flooding. Someone breaks into your apartment. It's covering stuff in your apartment, right? Which is pretty good. Someone breaks in your apartment, steals your big screen TV. They take your PS4 or whatever. You can get that. The insurance will cover it, right? Take some jewelry, covers it, right? Pretty good. I think he even said it might cover your car getting broken into in the parking lot of your apartment. So they go into your car, break into it, take your computer. Renter's insurance should cover that, right? Gotta look into your policy, but that's a pretty good deal. So if your coverage is $10,000-$20,000, that cover. The crooks ain't gonna come in and take the kitchen sink, right? They're not clearing out your apartment, taking your sofas and all that. They're gonna take the high priced items probably real fast and get out of there, right? So that policy should cover it. Homeowners insurance, if you own your house, right? Same thing if it's going to get damaged, a fire, or something that happens in your house, or someone gets injured in your house, that homeowners insurance pays for it. But I know a lot of us at TI communities, we have the renter's insurance. It's a little bit cheaper. Renter's insurance is probably pretty good. So something to keep, what's it called? Something to keep track of. So what else is there? I know that there's different. What time is it? Oh wow! So I've already been speaking for 27 minutes. Okay, so real fast, guys. I'm gonna hurry up because I'm almost out of time. There's flood insurance, right? If you live in a flood-prone area, flood insurance is. There's wind damage insurance, fire insurance, right? What else is there? You don't even notice this when you go like to Walmart and you buy something expensive like electronic. They offer you extended warranties. That's kind of like an insurance. I never get extended warranties, but that's something like, it's kind of like that saying that this messes up or something. Rental car insurance. You ever get a car that you have to rent, they usually require rental car insurance just for that period. So there's all types of insurance. Credit card insurance, unemployment insurance, accidental death insurance, right? I thought I was looking it up and it said the credit card insurance, or I've seen this where they're like, if you can't afford to pay your credit card, the insurance will pay for it. And it said, well, this isn't. I read on some, I forget what website I went to, and it was saying that like, we'll just save up money, or don't run up credit card debt, right? They're like, just don't run up credit card debt, and you won't have to worry about credit card insurance. But these are all things that, depending on you, unemployment insurance, accidental death. So a lot of things to look into. With the internet, it's real easy to bring stuff up. If you have questions, bring it up with an agent at an insurance company. There's tons of them, right? And so, because I remember a story of it came out in the news a couple years ago where somebody had a restaurant and they had a fire, and the business was lost, right? And the owner came out and they said, she goes, we just ended our fire insurance policy on our business. And she goes, that was literally like the month before. And so the fire destroyed their restaurant, and she was done. That was it. There was no money to fix it. So it's just one of those things, guys, that it's just insurance, it's the pros and cons. There's always risk in life. And so insurance is designed to cover those risks if they happen. You just got to balance it. So it's just something to do. It's just something to know, to be informed about, and decide what you need, what coverage you need, what's going to take care of your family, what's going to take care of your business, what's going to take care of you. And so it's just one of those things, guys, right? We just never know, right? You have a house paid off and you have no homeowners insurance. In a fire, God forbid, So just one of those things that you should be prepared for. Look into it. I'm Rolando from TI Communities. I appreciate you viewing this. I hope it helped you. So just keep watching, guys. TI Communities. We're having fun with this. Y'all have a good day. We'll see you again. All right. Y'all see you later.